If you are employed, you should get a payslip every month, but do you understand all the information contained in it? Do you file them or do you bin them? Are you one of those people who only cares for a payslip when you need to prove that you are employed? Well, this evening on Moneyline's personal finance segment, we break down the payslip. Joining me for this discussion is Marty Santana. She's PAYE Director for Tax at BDO South Africa. Thank you so much, Marty, for your time this evening. Is it mandatory for an employee to get a payslip?
Yes, the Basic Conditions of Employment Act says that you are required to get a payslip.
Okay.
And I think it's important both from an employer's point of view and from an employee's point of view.
Why?
Effectively, that if the employer has a dispute with that employee, they are able to prove how they made those payments and how those payments were made up. And an employee requires to look at that payslip and actually understand whether they're being paid the right amount that they were initially told they were going to be paid.
Yeah, because often when one gets an offer, we get so excited by the gross amount, what you are told, this is how much you're going to be earning a month. You don't think about what it actually means on a breakdown basis. So let's just talk about that very quickly. Firstly, what should be in your payslip? Effectively,
your basic conditions should be that you have the employer's name and address, employee's name and address, and what his position in the company is, the date on which the payment is being made for that particular month, and then it should have a breakdown of what is your gross salary. So effectively that should go back to what your contract said. So if your contract said, for example, 120,000 Rand, it should show 1/12 of that, 10,000 Rand. And then after that, it would show all the deductions that you're entitled to. So you have two types of deductions. You have what they call employer deductions or salary sacrifice, as we understand it in the industry. And then you arrive at what we call a basic amount. That is the basic that you normally see on your payslip, okay? And from that, you then have your statutory deductions, like your tax, your UIF, and any other things that you've agreed with your employer to arrive at the net amount that you earn.
So some of those might include the fringe benefits as well. So let's maybe talk a bit about those which do form, for some people, part of their salary. That's why you'd see a big difference in your net
Very
at the
much
end of the
so,
day.
yeah.
Can you say no to those, like your car allowance, your housing allowance, and so on?
Effectively, no. It's what you agree up front and what are the conditions that are set by that particular company that you're working for. So if a company by operation says that you have to be part of a pension fund, you have to be part of the medical aid, then unfortunately those are the deductions you're going to have to be aware of. Some companies will not have that, but if it's mandatory for that particular company, then you would have those deductions. Some of them also belong to your group benefits, so you might have group life, you might have disability cover, so those would also be reflected. So what happens is you start off with your gross salary. You then have what they call your employer contributions, okay? So you would have your pension fund or provident fund deduction, you would have your group life, your disability. You then have to look at the 7th schedule. The 7th schedule then tells you how do you tax those amounts that have been salary sacrificed. So the 7th schedule says that if it's a group life and it's an unapproved group life, there's a fringe benefit attached to that. So whatever you're getting as a benefit, it is going to be a fringe benefit. It's got to be subject to tax. Okay. And then once you've gone through those steps, the next one is to then go and establish what is the basic salary that will be shown on the payslip. And that is what then has all the deductions off it, and you then get a net pay.
And just staying with tax, I mean, what are some of the implications if, for example, you earn on a commission basis?
Okay. On a commission basis, what actually happens is you annualize your normal salary. Then in the month in which you get a commission, you then take the difference between your normal annual salary on your normal pay, and add your commission, and the difference between the two annualized amounts then becomes the tax on the commission. The same applies with the bonus. So what effectively happens is because you're already looking at your annual salary, anything that gets added onto that and the difference between that moves you into a different tax bracket, and it then getting taxed at a higher rate. So that's why you have people complaining that they've received a bonus and half of that has gone into tax. It's because they're being taxed at the higher level or the higher margin of tax.
Well, besides when you want to go and apply for credit, I mean, what other use is your payslip for?
It has quite a lot of uses, especially in this day and age where a lot of companies are going into liquidation and going through this credit crunch. What happens at the end of the day, sometimes the RP5s or the certificate at the end of the tax year isn't issued to an employee.
Yeah.
You now need to prove to the South African Revenue Service that you had pay as you earn withheld. So if you have your pay slip, that's a record of what you've got, because you can now show what your net pay is. You can look at your bank account, prove that that was the net amount that you received. So it is important for that purpose as well.
So don't bin it.
Don't bin it, that's what I would say.
Thanks so much to Marty Santana, who is PAYE Director for Tax at BDO South Africa.